Hi guys, I hope all is well. Welcome back. So this is the revision series. You should have studied on your own, and this is just trying to, make you remember everything you've studied, everything you've revised, right? So hopefully it helps you. So we are doing module 2, which is looking at the general gross income definition. So if you look at the framework of calculating your income tax payable to SARS, you will start with gross income, right? And then you less any exemptions. Income is defined, less deductions and allowances, add your taxable capital gain, and then you have your taxable income, and then taxes payable or normal tax payable if you're a company as per the 27% rates. You less your rebates, normal tax payable. So we are at the very beginning of our framework, right? Where we are saying gross income. We are here at the very beginning and we're looking at what is gross income and what would constitute gross income. Now it becomes very important for you to differentiate between gross income. Income is defined, taxable income, normal tax payable, as well as normal tax payable, because those are different things. So look at your framework and write down the differences for you. So the general gross income definition says this is the total amount in cash or otherwise that is received or accrued by the taxpayer in favor of such a resident or non-resident in the year of assessment, not of capital in nature. Not of capital in nature, module 3. All right. So case laws, right? And you're going to be just fine because we are revising them, right? So the first one is it should be total amount in cash or otherwise. So we are saying you're going to receive something. It's possible that whatever you receive is in cash or you receive something that is non-cash, right? So SARS is like, I want both that which is cash that you've received or accrued or has accrued to you and that which is non-cash. So say for instance, if someone donates sneakers to you, non-cash, gross income, right? So SARS has the onus, meaning the responsibility, the burden of proving what amount is supposed to be taxed, right? So if you want to claim a deduction in allowance, for instance, as a taxpayer, because it reduces the amount of tax you have to pay, the onus is obviously going to be with you to then prove to SARS that you should get this deduction. But SARS is the one in this instance who wants money from you, so they have the burden to then prove how much that amount is supposed to be, right? So the first case that tells us what exactly amount is the Taxation case. Then the second case is the Brumeria case. Forgive me if I'm pronouncing them wrong. Taxation case says total amount includes both cash amounts and non-cash items, right? That you just need to write the principle in the exam. Taxation tells us that total amount includes that which is cash and that which is non-cash. Brumeria case says exactly what Taxation said, but it continues to say that for the non-cash item, the value must be ascertainable. And then the Brumeria case continues to then prove the principle of quid pro quo. I think that's how it's pronounced. If not, forgive me, guys. Quid pro quo basically says in exchange of, right? It also establishes that, right? And then total amount in cash or otherwise. 2 cases, Taxation and Brumeria case. Then we go on to the second requirement of the gross income definition. That which is received or accrued to taxpayer, right? So received, 4 cases apply. Gildenhuy's case, which says that an amount is received by a taxpayer if it's for their own benefits and own behalf. So meaning this amount is for you to use, for your own benefits. You can use it as however way you want. So say for instance, you receive an allowance from home, right? So that is for your own benefits because you can use it for whatever you want, right? And it's for their own behalf. So you're not receiving it on behalf of someone else, but you're receiving it for yourself, right? So that's what Gildenhuy's case establishes. If I'm pronouncing it wrong again, sorry guys. And then we have the finance group case, right? Everything with finance must have, everything that has finance has the risk of funds being stolen. So once you think of finance group, think of illegal funds, right? So SARS says, even if the funds are from an illegal source, I still want to tax them because I see them as received by you as the taxpayer. So finance group case tells us that illegal amounts are also received by the taxpayer and will therefore be included in gross income definition. And then we have the Gen case. The Gen case says if you borrowed an amount, it's not received by you because you still have to repay it back, right? So if you borrow an amount, it's not going to be part of your gross income. And then Pure case tells you that if you are receiving an amount and it's not yours, then for it to not be included in the gross income calculation, you should put it in a separate account. If you don't put it in a separate account, it will be seen as yours. So you should put it in a separate account, right? So those are the 4 cases: Gen case, Gilden Heights case, Pure case, finance group case. Excuse me, in a test 1 exam, you don't need to list all of them. Just look at the scenario, right? Is the scenario talking about a loan? If it's talking about a loan, Gen case. Is it talking about illegal funds? Finance case. If not, or is it talking about you receiving an amount that is not yours? Pure case. You have to keep it in a separate account. And then Gilden Heights case can just be used if the scenario is not specific, right? So the definition says total amount in cash otherwise received or accrued, right? So what does accrued mean? So as per the people's case, people are very entitled. A lot of people are very entitled. So the people's store case says that an amount accrues to you once you have become entitled to it. So think of people, entitlement, right? So people's store case says an amount accrues to you once you become entitled to it. And then we have the Moy case, right? To accrue means to be unconditionally entitled to something, right? So there shouldn't be some condition you have to meet to receive this amount. At that point, by the year end, it should be such that that amount you have become entitled to it unconditionally, right? In the year of assessment, so we know for natural persons, they will follow the SARS years. For juristic persons, they will follow their own financial year. The SARS period is 1 March 2023 to 28 February 2024 for this year, right? So accrued to taxpayer not of capital in nature. As I said, not of capital in nature is going to be in module 3. Exam technique, you state the gross income definition. So you state total amount in cash otherwise received or accrued by taxpayer in current year of assessment not of capital in nature, right? And then you don't go on and you test every requirement. You look at where is the scenario taking you. Is it taking you towards total amount, everything being met but total amounts? Is it taking you towards everything being met but accrued to? Then you will say that all requirements, the ones that you just listed, are met except for this specific one that the scenario has showed you that there's some uncertainty about it, right? And then you apply case laws applicable to that specific requirements, and then you apply the case laws, then you conclude, right? So that's exam technique for gross income, the general gross income definition. Another thing, guys, that I feel like is important to mention is that, remember, in the gross income, in the framework, right, you have gross income, and the amounts that you include there are as per the general gross income definition. And then you have specific conclusions, your paragraph A, annuities, you'll have your paragraph C cap A, C cap B, your restraint of trade, all those special inclusions also go into your gross income. So the one that we just did right now is just the general gross income definition amounts that we have to now include, and we test based on these case laws. So we will do module 3, module 4, module 5, module 6